Excuse me.
Everything works. Okay.
The broadcast is now starting. All attendees are in listen-only mode.
Well, good afternoon, everyone, and thank you for taking time out of your busy schedules to log on to our Manhattan Life webinar today. And I know you're busy. It's open enrollment for 2 different venues of business. Just to let everybody know, you are muted, but there is a dialog box to the lower right of your screen, and you can type in your questions, and we will cover them all at the end of the presentation. I see a lot of people I know on the webinar, so I'm not going to waste a lot of your time on who I am. My name is Christy Saul. I'm one of the owners of URL. I'm also the Vice President of Disability and Specialty Products at URL, and that kind of encompasses a lot. Disability, critical illness, accident, hospital indemnity, gap plans, pet insurance, kidnap, ransom, you name it. If your client has a weird request, give us a call. We are a family-owned brokerage firm in business for over 30 years, and we do everything but property and casualty. And you should be able to see our website right now. And if you scroll over, you can see all of our different departments, annuities, life markets, health options, Medicare, employee benefits. If you have not, I'm not going to go through a tutorial of our website today. But if you've not visited our website yet and you need a login, our user ID is people, lowercase, password is business, people business. And there's a ton of information on our website, from applications to training. You know, if it's 12 o'clock at night, you need to print out a life application, health application, you can get it there. A lot about us on there, but I don't want to waste a lot of time as you're all busy. But you know, in the last few years, especially this last year during open enrollment, with the ACA agents and their clients, I think you know what really hit the fan, and you know, premiums are going through the roof. And in years past, maybe the clients were looking to, you know, help protect that deductible, and they still are. So we're going to go over some of those products today to help you kind of help your clients. What I find really sad is that in addition to, okay, I need to protect my deductible, I'm getting so many calls every day saying, you know, my client doesn't care about the penalty or the taxes. What do you have instead of ACA? So of course, you know, Major Med is always the first option, but we're going to give you some options today to supplement that. And again, if you have a client you run into, at least cover them with something. So on the phone with me is Matthew McKinney, who is a Worksite Agency Director for Manhattan Life. He will be doing the presentation today, and without further delay, I'm going to hand the presentation over to him, and we will take it from there. And there we go.
All right, Christy, I appreciate you having me today. Thank you to everybody for being on here. I know that we are all busy, so we definitely want to go ahead and get started and kind of talk to you a little bit about what it is that we're doing that will hopefully help you guys out and give you some solutions to some of the problems that are occurring. So we're going to talk about hospital indemnity products today with Manhattan Insurance Group. So a little bit about who we are is Manhattan Insurance Group encompasses several different insurance companies. The one that we'll be talking about today is Central United Life. So we have an annuity company, we have a life-based company, we also do med sup, and then Central United Life is our ancillary health company. So ancillary health company, and here are some of the products that you have access to when you become contracted with us. So pretty typical what you would see ancillary benefits in the marketplace. So what we're going to talk to you about today is kind of the goals. We're attempting to increase your income, but I think this slide's a little bit different because we're really trying to find some solutions for some of the issues going on in the marketplace today. But with that, we can definitely increase your income by at least $10,000 if you're just offering these products. There's no new prospecting because you're already out there, you have the prospects. So I'm not asking you to do anything outside the box of what you already do. You're in the health market, these are health products. Your clients are going to love you for it because you'll be able to save them. If they actually utilize their insurance, they're going to benefit from what we're going to talk about today. So that's a little bit of our personal goals outside of our clients. So when we're looking here, and I'm going to go ahead and click through here, we're going to talk about 3 separate products. These are all hospital indemnity products. The first is called out-of-pocket protection. This is a simplified issue product that can reduce or eliminate hospital deductibles and outpatient surgery. It's as simple as it gets. The next product is called Central Choice. This is a guarantee issue product that can be sold in conjunction with major medical, or it can be sold standalone. For these clients that are electing to not have anything, take a penalty, this is an option for them. And then there's Affordable Choice, which is a large limit indemnity plan that can be sold in conjunction with major medical or standalone. This is kind of more of a jumbo plan. It is underwritten, so it's not guarantee issue, but this is out there. So we've got 3 options here of 3 different products that are all great products. So let's talk a little bit about the market. Okay, insurance premiums, everybody's aware of it. We've seen increases with the insurance premiums. PA is up 51%. I think Arizona's at 145. Alabama's at 71%. So we're all experiencing this right now. Out-of-pockets have gone up, as they always do. And 100% of the population, if they buy an ACA plan, has out-of-pockets. Nobody is not in that arena. So we all have to pay to use our insurance. And then, of course, there's 100% of the population would rather not pay their out-of-pocket expenses because it's an extra bill. So what to do? What are the solutions we have for our clients? There's really, it comes down to about 4 that I can think of. You pay more for the same major medical plan if you have the capital. You can buy a lesser plan for a cheaper premium but more exposure. Now, for those of us who are in states where we've had a premium increase, you may pay the same premium for a lesser plan today. And then you can elect to go uninsured and pay the fee. As Christy said, I am being flooded with calls as well from agents saying, clients are calling me up. I had 16 the first day of open enrollment say, I can't afford to do this, so what do I do? And then there's, of course, so you can elect to go uninsured and get an exemption of the fee if you're eligible for that. Okay, so these are the choices that we have. If anybody else has any other choices, let us know. So what we're doing if somebody elects to stay in the ACA market or to buy a major medical plan, essentially they're buying a plan. Now, keep in mind I said they're paying a higher premium this year, maybe for coverage that has more exposure. So when that happens, we're essentially increasing their medical bills. So our clients are having to pay more for less benefit and create exposure for things that they may or may not be able to afford. So what we're talking about doing when we're selling an indemnity product with our major medical is offering to give them cash with their medical bills. So when we're offering an ACA plan or a major medical plan, we would offer the indemnity product to say, this is what's going to give you cash to pay for that exposure, okay? In most cases, depending on where you're at, and it's different for everybody, it could differ by county, this may be a situation where they can take a lesser premium and buy an indemnity product. It may be a situation where you're saying you're paying the same amount for more exposure, but I'm going to add this into it to help you out. And so really all you have to do is propose this product along with your main deal. So first thing we're going over is the out-of-pocket protection plan. This is as easy as an indemnity product gets. You've got online enrollment. Issue ages are 18 to 69. Now you can't be on Medicare, so once you're on Medicare, you're not eligible. Pays directly to the policyholder the cash. You do not assign the benefits to the hospital. You file the claim directly with the insurance carrier, and we send them a check. I have this plan on myself. I have used it, and I'll tell you something. When you're being flooded with medical bills, every day I get home when I max my out-of-pocket, and I get a $2,000 bill, an $1,800 bill from the hospital. And it makes you sick because you're working hard, you're trying to get ahead, and then you're getting slammed back down when you get home. When I received my $5,400 check from the carrier, it was an unbelievable feeling. I cannot even express how that works for somebody. So this is an actual benefit that I truly believe in that will help save your clients. You can choose benefits and premiums, so we can shop all sorts of different ways. It pays in addition to all other insurance, so we're not coordinating with your major medical. It's a straight indemnity. We say you get A, if B happens, that's what happens. There's no deductibles or networks, and it's easy claim filing, okay? All you're doing to file a claim is you're getting a form from the provider and sending it to the insurance carrier. There's no social security numbers required if you have somebody who has an individual tax identification number. Depending on the state, that's more important in certain areas other than here. All right, so this is the product approval map. So everywhere that's green is where this product is approved. Now, if you do have a yellow state or you reside in a yellow state, stay on the line because we've got other products that are in these states. But this is where the product is approved that we're talking about right now. And this is the out-of-pocket protection. Simple as it gets. There's two main benefits that are hospital benefits. The first one is you get a daily inpatient hospital confinement benefit. It's either $100 or $200, and it pays up to 10 days. So if you select $100 and you're in the hospital for 10 days, you just got $1,000. Included with that benefit is the first hospital admission benefit, which is right below it. And this pays once per year. It's designed to pay your deductible if you go into the hospital, if you're admitted. You can select $2,500, $5,000, or $6,350. Now, those limits are the old limits that used to be, and I've had the question if, are we going to raise that? Currently, not right now, so the max benefit's $6,350. But I'll tell you something, getting a $6,350 check versus, and having an $800 bill versus having a $7,100 bill is a huge difference. So keep that in mind. And that's the hospital benefit on here. So under the scenario, if you were to go in the hospital for 5 days and you had a $5,000 plan and a $100 confinement benefit, that would be $5,500 that you would receive. If you went in for 1 day, you'd get a $5,000 check. Now, in order to be eligible for that benefit, you have to be admitted to the hospital as a resident bed patient for a 24-hour period. So observation, if you're hanging out in an observation room, that's not considered admitted. So you have to be admitted for 24 hours and then that benefit kicks in. On the daily hospital confinement benefit, that pays continuous. So if you had your first 10 days and we gave you $1,000 and then you went into the hospital later on the year, that benefit would kick back up. Included in this product, you get 2 $50 office visits per year. So if you go to a doctor, you get $50. That's twice per year. So keep that in mind when you're looking at these premiums. We have optional benefits that are on here. Outpatient surgery benefit twice per year. It pays the actual. It'll pay you the actual amount listed up to 2 times per year for an outpatient surgery that's at an ambulatory surgical center. And then you also have an emergency accident benefit, which is 4 times per year, $250. If you go to the emergency room, that's also if you go to the physician's office for an accident, an emergency accident. That is the plan, and it's as simple as an indemnity product gets. Very useful, front-loaded. This is a rate example. Now, this isn't the Pennsylvania rate, so this is going to be pretty much every other state. If we're looking at a plan where somebody has $100 a day and $5,000 and they're 54 years old, the total premium on this is going to be $28.49. Now, if you could protect somebody for less than $30, and keep in mind they get 2 $50 office visits, so that's a $100 decrease if they claim on both of those. You're essentially, for less than $30, you're giving them the ability to protect that hospitalization stay and cover it completely. So that's pretty great for 54-year-old, and they could be a smoker. These aren't smoker rates. So, all right. So PA is a little different because we had rate increases, not rate increases there. When we filed, the state wanted the rates to be a little bit higher. So when we're looking at a 54-year-old, it's $50 as opposed to the other rate. But if we're looking at somebody in the younger ages, it's around $40 for that. That also includes the two $50 office visits. So those are the rates. As we go through, there's individual and child rates, employee or individual spouse rates. There's family rates with up to 3 children, and then you can throw on additional children if you have more than 3. And so if you're contracted, you'll receive the rate sheet and the brochure, and you'll be able to kind of calculate all that. That is the product that I would recommend somebody offer with every person. Now, it's a simplified issue product, so you have to medically qualify, but there are health conditions that are knockout health conditions, and there's a height weight requirement, but it's pretty liberal. Now, if you have somebody who's in a situation where you say, well, they don't medically qualify for that, we have a solution for them, and that's Central Choice. Central Choice is a guarantee issue hospital plan. The only contingency for the guarantee issue product is that the person, the primary insured, has to be working full-time in order to be eligible to sign up for this. Full-time employee is 27 plus hours per week. That is the only requirement. On both this product and the outpatient, or excuse me, out-of-pocket protection plan, there is a 12-month pre-X on any medical conditions. So anything wrong with them, we won't cover for that first 12 months. If they file a claim for it after that first 12 months, anything goes, okay? So let's take a look at Central Choice. This one has a little bit more bells and whistles. It's guarantee issue. We actually have 4 plan designs. I have 2 listed on here, but we're going to go ahead and look at all 4 of them so you can see what's there. The issue ages on this product are 18 to 64, so we're in the under 65 market. And the benefits, a slew of benefits, ICU, surgery, hospital confinement, emergency accident, outpatient sickness, specified injury, private duty nurse. And the applicant must be working full-time, actually 27 plus hours per week rather than 30, so you get a little leeway there. All right, so we're going to look at this plan, but rather than do this, what I'm going to do is I'm going to bring up a brochure so we can look at the brochure. So you can see it. It's all the plan designs since we're talking about the, oh, I'm sorry. I got to get the actual brochure that we want to look at. So, all right, here's the Central Choice brochure. So I'm going to scroll down to the benefits listed for PA. And this product's going to be a little more comprehensive than the out-of-pocket protection plan. So all of these benefits compound on top of each other. So you can claim on every different level all together. And as your claim, depending on what the claim is, this benefit in this policy can pay a pretty substantial benefit. So when we're looking at
Matthew,
yes,
I don't want to. I'm sorry, it's Christy. I don't want to interrupt you, but is there any way? Maybe I'm the only blind one, even with readers. Is there any way you could just like enhance the screen, just maybe one or 2 more?
Sure.
Perfect, perfect. Thanks.
How's that?
Well, I'm not that blind, but that might. It was hard to see, and I know if you're looking at a computer screen or a smaller one, I'll let you go.
Sure.
I won't interrupt again. Thank you.
Oh, no problem. Thanks for letting me know that. I'm probably sitting here squinting at it myself. So when we're looking at this, you have 4 plan designs. These bottom 2 plan designs are designed to be sold in conjunction with a major medical plan to help supplement the deductible. These bigger plans are actually can be sold standalone if somebody decides that they want to go uninsured. Of course, we always recommend somebody buy major medical, but if they have made that conscious decision to say, I'm going to pay a fee or I'm going to get an exemption, they need to have some sort of coverage. Otherwise, they're completely out there exposed with nothing. They don't receive any cash from anything. They get billed. So this is a option for them. When we're looking at this, we've got a bunch of different benefits. Daily room benefit pays you the amount per day. There's a lump sum indemnity benefit. This is another hospital benefit that pays this once per calendar year. There's our first hospital confinement benefit that pays this amount over a 6-day period. So when we're looking at this bottom one, people always ask, well, what does that mean? You would receive $500 the first day, $500 the second day, and then $1,000 each day after, for a total of $5,000. On the bigger plans, it's $10,000. Okay? There's intensive care unit benefit that pays up to 20 days per confinement. If you go into ICU, think about this. If you have one of these bigger plans and you go into ICU for 10 days, just this benefit is going to pay $25,000. So this is substantial. Private duty nurse benefit pays up to 30 days, $250. Surgical plus benefit pays this amount per day up to 5 days per confinement. And included in that is anesthesia benefit that is an additional benefit. If you have an outpatient surgical, it'll pay you 25% of that amount. So if you have one of these smaller plans, you'd get $250 for having an outpatient surgery. Routine benefits, these are included in the plan, so we will pay $200 per calendar year for mammography, a PSA, or a pap smear. Then you have emergency accident benefit. This is the same benefit that was on the outpatient sickness, or excuse me, outpatient. The out-of-pocket protection, $250 per accident, 4 times per year. Then you have a specified injury rider. This is essentially a mini accident plan. So it can pay up to $2,000 depending on what you've done, what you've broken, and all that. And then you have essentially doctor's office visits. Outpatient sickness, you have to have a sickness for 4 different sicknesses per year. So this is designed to help cover copays or to pay if you're uninsured. Now, we're coming down, we're going to look at some premiums here. Now, you guys have seen the premiums in your particular states, and most of us have had sticker shock. So when we're looking at this, for $44, you could offer this along with your medical plan, and it's going to pay for all of these things. Now, when you're looking at this, let's do a claims example before we look at the actual rates. Let's say somebody was hospitalized, if they bought the Essential Choice plan, they were hospitalized, they had a heart attack, went into the hospital for an ICU for 3 days, and then they were confined for a 6-day period. Okay. Premiums $44 a month. Let's add it up. 6 days in the hospital at $50 is $300. You get a $100 benefit, hospital benefit, so now you're up to $400. You get $5,000 for the other hospital confinement, first hospital confinement, so now you're up to $5,400. You were in ICU for 3 days, so you receive an additional $1,500, okay? So you're up to $6,900. Let's assume that you had a surgery while you were in there, and you were in 5 days, so you get $1,000 per day up to 5 days. You're at $11,900. You get an additional $200 per day for the anesthesia, assuming you had anesthesia. That's $1,000. So this plan for $44 just paid out a benefit in that scenario of $12,900. It's guarantee issue. It doesn't matter how short you are, it doesn't matter how sick you are. As long as you're healthy enough to be working full-time, you're eligible for this plan. There is a 12-month pre-ex, though, so keep that in mind. After the first year, everything goes. These are the premiums: $44 for the smallest plan, $65.90 for the enhanced choice, which the benefits increase, and then it goes up from there. So that's basically the way this plan works. And I'm going to go back to the presentation here. This is just a sample of what we just looked at, and I'll be able to answer questions as we go forward. And before we do that, we're going to go ahead and go into the affordable choice. So we've looked at the out-of-pocket protection plan, which is designed to be sold with your ACA plans. We've looked at the Central Choice plan, which is a guarantee issue plan that can be sold with your health plans or standalone if you want to do that. And then we've got the affordable choice plan. This was really a large limit indemnity plan that we designed out of the market prior to ACA. And really we didn't know what was going to happen with it when ACA hit. Now that rates have gone back up and you're getting those phone calls of people saying, well, I can't buy what it is that's being offered to me, this has come back into the marketplace. So we're seeing a large increase in this product. Affordable choice is a simplified issue, a hospital large limit indemnity plan. So, and I'm just going to go straight down to the benefits so we can see. I'm going to blow this up a little bit. So we've got, excuse me, inpatient hospital. This is the elite plan. There's two plan designs on this. Pays you $3,000 per day for inpatient confinement, up to $200,000 calendar year. You get an additional $2,000 if you go into the hospital. There's an emergency room benefit. There's a surgical benefit, up to $50,000 depending on what's going on. We pay for the assistant surgery, or surgeon, the anesthesiologist. We have doctor's office visits. Again, there's outpatient medical benefits, and I'm kind of just blowing through this a little bit rather than going too in depth because, you know, if you're not kind of reviewing over it, it's kind of all just going to go away anyway. So I just want you to see what is available here. Outpatient medical benefits for preventative service, laboratory service, radiology services, prescription benefits, ground and air ambulance, and then a lifetime maximum. Okay. In this plan also, and that's the elite, and I'm scrolling through to the classic, and I'm going to show you the rates on these. So, and this is age banded, so we're looking at the younger ages. Let's go to the middle ages here. So if you have an individual who's in their 40s, they can pay $127 for the classic and then $162 for the elite. And then we go up here. So this is an option, and we've had a few agents with URL who have already picked up and started selling this product. This can be sold in conjunction if you have somebody who wants a high-limit hospital plan and they're also buying a medical plan, or it can be sold standalone. And we'll go into that a little bit of why that is. So this is basically the plan, and I kind of fluffed over it, but I want you to know that it's out there and it exists. And anybody who wants to see this brochure, I'll email it to you as well too. So let's see, we're going to go back into here and look at it. Each agent that becomes contracted with us, if you're currently contracted, you have one of these enrollment links. This is our online enrollment system, okay? This is what it looks like, and we're going to I'll show you real quick how it works before we do that. So we're going to go back out, and I know I keep blowing through this. So let's see. All right. So this is URL's enrollment link. So this is all the products that are available with the company. Everybody has access to this. It is designed specifically to you. You enroll your clients online. You can do it over phone if you need to do that. You can put it on social media, and somebody can self-enroll if that's the way they want to do it. So if we were to go through and select a product, I'm just going to show you how easy it is. The first page is going to be the benefits in case you've forgotten it or don't have the brochure. You simply click Get a Quote. We're going to click for an individual. Put in here. We'll go female. We'll go tobacco user. We'll do, let's do Pennsylvania because that's where you guys are at, most of you. And then you click Get a Quote. It's going to give you the selection here, and it's got a total premium calculate. You'd simply click what you want. It's going to calculate what the premium is. Now this is a $2,500 plan, $100 for your confinement plus your doctor's office visits, 25 bucks. You click Apply. Once you click Apply, you're in the application process. So we're already here, and now we're enrolling. You mark anything that's got a red star. So as you go through here, it's name, height, weight, email, employer's information. You don't have to be employed for the out-of-pocket protection, but we do ask for the information. And then you would come down and answer the medical questions associated with this product. Have you been performing normal activities? Will this replace or change anything? Have any person had surgery or been advised by a physician to? And then we kind of go through the medical questions with this product. Once we filled all that out, we come down to the application to the mother's maiden name, which is the signature for the client. We put in the mother's maiden name and click submit. Anything that is missing, it's going to tell us it's missing and shoot us right back up to where it was. Now, this is a live site, and I'm not going to fill out every field because we all have jobs and got to do them. But when you do that, and let's see here if I can, and bear with me for a moment, and I'll show you what it looks like if I can get to it. Well, I'm having trouble finding it right now. So basically what will happen is we will, when you click on that, it will send you an automated email that says you just enrolled Linda Smith in an out-of-pocket protection plan for $25 on this date. That is your receipt. You have the option to print the application. You also have the option to enroll somebody else in another product. So we have lots of agents that are selling multiple products to people, and it will save all that personal information that you typed up, so you don't have to do it every time. And then it gives you the option, if you are doing a group enrollment or something like that, and seeing several employees, to close out of there and enroll somebody else in another product. And so that's basically the enrollment system. So we've gone over 3 products: the out-of-pocket protection product, simplified deductible product, the central choice product, guarantee issue, 2 big plans, 2 small plans, and then the affordable choice, the simplified issue, large limit indemnity plans. These are all available for agents here. Along with this, you also have access to all of our other products, which are cancer products, accident products, life products. They're all available on your site. So let's talk a little bit about how this benefits you. We do trips. These are company trips. The qualification, if you're currently not contracted and you become contracted for our big trip, is $85,000 of annualized premium. The qualification period is through 4/30, I think. So it's through the end of April, paid premium. And if you were to do that, we are going to French Polynesia, to Tahiti, Moray, and Bora Bora. That's on a cruise, and these are all top-notch trips. If you don't qualify for this trip, we're doing another trip to a smaller Caribbean location. I think it might be Grand Cayman. The qualification for that is less. It's around $50,000. So I hope everybody can make it to these. It's a lot more fun when we have a lot of agents there that I work with. So we have these available. So I'm going to pass it back over to Christy so we can answer some of those questions.
I'm sorry, I fell asleep thinking I was in, Polynesia or the Cayman Islands. So
was I that monster?
I was like, oh, that looks so nice right now.
Yeah, it's hard to keep it too exciting when we're talking about insurance.
I keep and I'll tell you that. I'll tell you this. I mean, we've worked with you for a very, very long time, and I don't tout a whole lot of companies, but Manhattan and Century United Life are a top-notch company, from the people you work with to your products. I forgot you had the trips. Oh my gosh! But I mean, even for a company, I'll get into the questions now. But even for any company now, except for I would say a handful of life carriers, to have trips like that says something. Because and I think a lot of you on the call probably remember the Aetna trips and the health carrier trips, and nobody does that anymore. I mean, we do trips for our agents, so it's very, very nice. It's a giving back. And but great presentation. Let me see. I have questions because I do tend to listen to you, and
sure.
I learn something new every time because I handle a lot of carriers. But I had questions of my own. But let me get to any agents' questions first. Bear with me one second. I think that one question was, and I took some notes. I guess I'm a little confused too as to, for example, the out-of-pocket protection. Now, does that have to be sold with an ACA plan, or can that be sold alone?
It's a good question. That plan can be sold alone as well too. The reason why I didn't mention that initially is because it is a lower indemnity product, so you get a flat amount, and once that amount's done, the benefit is essentially done with the exception of the continuous hospital benefit that's smaller, 100 or 200. So if somebody's going standalone, now that one is front loaded, so it's 1 day in the hospital, you can get $63.50. But if you are looking for a bigger benefit because you've elected to go standalone, the bigger indemnity products are going to be Central Choice and Affordable Choice. But you can sell the out-of-pocket by itself.
Okay.
And Chrissy, real quick, I want to touch on that.
Go ahead.
ACA changed the rules on indemnity products. And back in May 1st of 2015, they overreached their bounds and said you can't sell these unless you're buying a major medical plan.
A lot of carriers did that. Mm-hmm.
Yeah, so people see this, and it's because it was written in the law. What the government actually said was, back on page 863 of the Act, was that they would fine the insurance carrier, I think it was $100 per day per insured for people who were in that arena, if you could imagine what that equates to, if you've got 1,000 policies on the books. So that's why you saw people flood out of this market. The reason why we're able to say that is because we actually filed a lawsuit against the federal government, and we won that judgment. It was appealed, and we won again. And for anybody, I've sent this out to some agents. It's public information. For anybody who'd like to see the judgment stating this, I'm happy to send you the link so you can see it for your own records. But that's why we're able to say that, because we wanted to fight that overreach.
Yeah, and I think you might be the only one, because you told me that, and then. You are, and then and I love all my carriers, so I'm not mentioning names, sure. But because when we had some agents submit similar products to other carriers, and then the underwriter got back to me and she said, well, we declined all 4 cases. I said, why is that?
Sure.
And they gave me that reason, and I came back and said, well, what about Manhattan Life? They got away with it.
Yeah.
And then it was like 2 months later they said, oh, you can do it now. I'm like, yeah, well, they did the hard work for you, but you know what I mean?
Well, it's funny because when we were at convention, we were in Hawaii this past summer, and the best presentation was from our head legal counsel, which is a shock, saying that your legal counsel gave the most interesting presentation, but it was very well done, and he basically said, we tried to get with our competitors to say we need to fight this, and nobody supported us, so we went alone on it. We had some partners in the field, but no carrier partners. And once the judgment was made, of course, there's piggybacking. But keep in mind,
everybody wants to be your friend. Yeah.
Oh, yeah. But that judgment is based on our particular products, and we had to make some tweaks in order to make it happen. So just keep that in mind. And like I said, it's public information. I can send it out to anybody who would like to see it.
Okay. And I think I have that as well. You had sent me. So let me see if let me check my questions. Those were 2 of them. Okay, so out-of-pocket can be standalone, but out-of-pocket is not guaranteed issue.
No, it is not guaranteed issue. It's a simplified issue product. So there are medical conditions that are excluded. There's a height weight requirement. All that information is in the agent guide. They will pull an MIB on it. And then do the underwriting on it.
Okay, so generally speaking, height, weight, what are the major knockouts? Height, weight, MIB, history of cancer,
Yeah, well, let's
generally speaking.
Are y'all still looking at my screen?
I think, actually, I think everybody's still on. There's more on right now, so.
Okay, so let me pull up the, let me pull up the agent guide here if y'all are able to see this. So I'm scrolling down. This is the agent guide. It's only 4 pages. So there's considerations: type 2 diabetes, mental lung disorder, hernias. Those are all considerable. These are the uninsurable health conditions in the last 5 years. So we've got AIDS, alcoholism, stroke, and hepatitis, so you can kind of see how it goes.
Mm-hmm.
Diabetes, people always ask about diabetes. It's a toss-up because there's a lot of different levels of it.
Right.
So this is everything that's listed in the last 5 years. Height, weight chart, if you come down to the bottom of it, let's see, I'm a male, I'm 6 foot, so I can weigh almost 300 pounds. So I got a little ways to go.
I got a ways to go too.
So it's pretty liberal. It's pretty liberal.
Yeah, it is. Okay.
I feel good when I look at this. So.
Okay.
I'm just going to leave this up so you guys can kind of peruse it if you want to, right here.
Perfect. Okay, so they can, and I hate to reiterate, but so all of these can be sold standalone. They're not all guaranteed issue except for the central choice and affordable choice, correct? Or am I?
Central choice?
No, the affordable
is the only one. No, the central choice is the only one that is guaranteed issue. Okay.
And affordable
so
choice is similar. Okay.
It's going to be a similar underwriting to what we're looking at here.
Okay.
And that has its own guide as well too, so we can send that out for more detail.
Yeah, if you don't mind sending them to me, because I don't know if I have the agent.
Sure.
I have a lot of this information on our website, but I know I'll get a lot of questions and requests for this.
Sure.
Let me think. I don't know if I have any more questions, but okay, I'm curious because you know, you had mentioned earlier in the one of your first screens is that I think you mentioned $10,000 of income for agents that they could. Do you have any kind of idea? I mean, do you have agents that currently, and I don't mean to put you on the spot, but agents who are currently increasing their income by $10,000, and if so, what are they selling and how much are they selling, and do you know if they're selling it standalone or in conjunction? Is it with your life plans, cancer plans, or all the plans kind of combined? I'm trying to pick your brain, sorry, in front of everybody.
Yeah, good. Well, good question. And the answer you may have more questions about it when I get done. But that screen is basically off of the thought process that if you had 100 health products, 100 health sales this ACA enrollment, and you offered the out-of-pocket protection with every client you presented to, because everybody's got exposure. So if you simply said, I offer it with everybody, and I let them tell me they don't want it, rather than me trying to add it on at the end, if you did that, you'll probably close 75% of the time on that particular product. Because the sale here is you're presenting the package to them and saying, I'm your broker, I know what is best for you, and here is what it is. If they ask what about the product, and you say, well, your health product has this out of pocket. The reason I've included this is because this is going to cover that if you go into a hospital. They say, well, I don't think I need that. Say, well, do you have $5,000 to pay a hospital tomorrow? Most people are going to say, well, yeah, but I don't want to. Well, do you want to? No, that's why I've included this, because it's going to protect you and give you cash. If that's how you're doing it, you're automatically going to increase. You'll make 10 grand off that product. I have an agent I have an agent, and there's a couple different markets. I have an agent that's selling primarily that with their ACA sales. He's made 31 sales since November 1st. So because he's bought into that concept and he believes in it. We have, obviously, if you're going to make more on higher premium products like the affordable choice or the essential choice product. So we have agents that primary market is people who have elected out of it, who are selling those and saying, well, anybody who's saying, I'm not doing this, they're going to buy this. You're going to increase your income more there. And then, of course, if somebody's completely uninsured and they're going to buy the affordable choice, you'd want to tack on an accident plan or a cancer plan. And those are all available through the same link. So it's kind of across the board.
Okay. Thank you. And next, the one question I see at least more than once is, no, this does not meet ACA qualifications. So people are going to get penalized if they don't have ACA protection. This would just be a tack on. If they just decided to go with these plans, they would be fined. The next question, I think I know the answer to, but you're the expert. But there's a question with the simplified underwriting. Is there? I'm assuming it's accept or decline. There is no, we can rate up, correct?
That's correct. It's an accept reject.
That's what I thought. Okay.
And keep this in mind. Yeah, with the out-of-pocket protection, the simplified under. If they don't qualify for that, they qualify for the central choice product as long as they're working.
And I tell you that even that very, what is it called, the essential and the essential choice? The last one on the right, that's fantastic coverage for the price.
Yeah, yeah.
It's really good coverage.
Those can generate huge claims, and also in the bigger the product, that same claims example, if you had one of the top products, comes out to closer to $40,000. So it's pretty substantial.
No, I think that might, no, but I think these products are great, and they're needed. And, you know, I always go back to my disability and critical illness stats where, you know, I think it's now close to 60% of all home foreclosures and bankruptcies are due to a disability, critical illness, or medical bills, and most of the people had health insurance. So even though people are covered with health insurance, those medical bills are going to kill you. So,
sure.
Let me see if there's any more questions. I think. Oh, no, we have another one. Can these products be sold as employer paid in addition to group? Or,
I'm so glad. I'm so glad that this question was asked because I did a poor job explaining this. These products are all available through bank draft to individuals or in groups. Actually, we want more groups. So we have an entire worksite department. You think I'd mention that if I'm the Worksite Agency Director.
I didn't. I introduced you as that, did I not?
Yes. So the answer is yes. All of these products and all of our products are available to groups. We actually like having the groups business. There's Section 125 services that we offer for free, premium-only plans. And then on some of our products, like our cancer products, there are payroll rates. They're composite rates, really good. So yes, we want group business. You can use the same enrollment platform to enroll groups and put them onto list bill through that. And it's just a 3-page document to get the group number set up, and then from there you can kind of go. If you're doing groups, we do offer special underwriting for groups as well too. So anybody who's got that can email me, and I can kind of go through that.
Okay. Next question is, do the premiums increase with age?
No, they do not. So the premium that you buy is what you're locked into for the life of the policy. And the only way that premiums would ever increase is if we filed a rate increase with the state. In order for us, because all these rates are filed with the state, in order for us to increase rates, because it's not a group product, they're individual guaranteed renewable products, we would have to file a rate increase with the state for every policy in that state, and we would have to show proof of loss prior. So it's not just an assumption that we're going to lose millions of dollars. We have to have actually had that happen. To my knowledge, I don't think on Central Choice we've had that out since 2009. Out of Pocket's one of our newer ones. Affordable Choice has been out since 2011 maybe. So we haven't had any rate increases on it.
Okay, I know this agent very well, Tom, who's asking a lot of these really great questions. Tom, I did not understand your last type question, so I tried to unmute you. Can you hear me?
I can hear you. Can you hear me?
I can hear you, Tom. Why don't you ask Matt your question?
Okay, what I was asking in relation to the group scenario there, what I meant by my last question, can an employer pay the premiums as a benefit for the employees, or does it have to be the employee pay for the premium?
Sure. We would love for every employer to contribute and pay for it, put it that way. So that it can be either or. Certainly with the out-of-pocket protection plan, and you're thinking of it in the right manner, what I tell folks is when you go into your employer, this is a benefit really that to offer along with the medical plan and for the employer to contribute to as well. You're going to get better participation, obviously, and persistency is going to be spot on. So yes, they can do that.
Okay, because I run into a lot of companies. I mean, I do a lot of enrollments with Colonial, but I'm not going to, jeopardize that information. But I do know
Sure.
a lot of companies, they have a lot of large deductibles, and these employees are paying, their share of the premium. And of course, the employer pays the bigger part of the premium. But some of this kind of things would work well in a company with those type of situations. If the employer said, okay, we're going to add this one plan, I didn't know all your plans there, so for an additional $25 a month, we're going to pay on this one plan that'll help you with that deductible if it's ever came to that situation.
Sure, sure. And as time's gone by, the marketing strategies have changed with the market. But that conceptually it's the same process when we started to see group premiums go up since the early 2000s. We were giving more exposure to these employees, and they were getting contribute less. And so one of the offsets to that was we were convincing employers to do exactly what you're saying, to pick up the tab on a indemnity product and to say, yeah, you're getting a little more exposure, but look what I've done for you. So your thinking is spot on with that.
Well, I'm just looking at, I don't know your plan, all the plans that you have here, because I got in a little late, a couple minutes late, but
Sure.
Tom, I can send you all the information, Tom, or Matt can. They've got a lot of really good products, even their life product, their cancer, their accident, fantastic.
Well, yeah, I mean, I do want the information. Here's a scenario. I have two people I know of. One guy called me about 3-4 weeks ago saying, hey, I can't pay the premium now. What do you got for me? I said, well, I don't got anything for you really, but let's put a cancer together or a critical illness together. Let's do a couple different plans. And, he says, I'll pay the tax hit at the end of the year. So I'm waiting to hear back from him, but I didn't know anything about this kind of plan yet. So, and then I just had a guy call me yesterday. He says, man, we got to do something about this insurance. So I just looked up his numbers for his age group. He'd be on the bronze plan. He's looking at $700 and some a month for himself, and that's outrageous for a 55-year-old person. Sure. And if he can buy one of these plans on a standalone and take the hit at the end of the year on the tax penalty until Trump changes things.
Yeah, and obviously the market's going to change as things change. This is the reality in which we live. So all of these products are viable solutions for that exact arena. And if you've got any particular situations you'd like to discuss, I'll shoot you my email and my phone number, and we can kind of talk about that and whenever you have them pop up.
Sure.
All right, Tom. I think I'm going to mute you again. I'm joking. No, I love you, Tom. Tom, you might be one of the only people I've actually unmuted on a webinar before. So, right. I think, Matt, that might be all the questions. I'm sure we're going. I think that's it for now. I'm sure we're going to get more, especially during open enrollment. And like I said, the interest has been there and is increasing. So I appreciate your time. I appreciate all the brokers' times that are still on the call and listening, because I think all your products, really have a place in today's marketplace, one way or the other, either to supplement or stand alone. And again, I appreciate your time. Great presentation. And you guys know where to find me. And if I don't have the answers, I know where to go to get them. Thank you so much, Matt. Everybody have a great day.
Yes. Thank you.
All right. Bye-bye.
Christy, send me that information and Matt's okay?
I will.
All right, thanks.
All right. Take care. All right. Bye-bye.